What is credit card stacking? How does it work? Is it actually effective for you and many others? Should you do this as a startup and as a non startup along the way? And much more. Hi, welcome in. This is Michael with Viral Funding Solutions. I'm a business funding expert. You could also say a business loan broker expert who's helped out a lot of people get the right type of funding under the right strategic partnership and roadmap longer term, not just short term. So I work with a variety of services, not just on the credit side, personal and business, but also with term loans, advances, equipment, SBA loans, and many more in between. And I have a lot of experience with these in one way or another, helping out people, as well as through my experiences. I have other businesses as well. So I've been in your position, whether you are just getting started or you've been in this for some time, but I run a digital marketing agency / lead generation business as well. I had that one way before this one. This is my primary focus now, but I still have that. I have a health affiliate marketing business where I've helped out people with supplements, vitamins, pain relief cushions, ergonomic desk chairs and office supplies and things like that, and many more things that they needed for health related reasons, for back pain. And then it ended up moving into other segments. And then I have other verticals in the affiliate space, other ventures. Again, this has been my primary focus, and I'm more of an analytical type. I'm not one to scream into your ear, or I'm not a wordsmith. I have a background where I went to school, I educated myself, and I studied a bit of sociology as I was a Division I soccer player at the time for a bit. And then I migrated into chemical engineering classes, and I went down that route. My favorite classes being chemistry. I love math, I love systems. And then I had to make a big change and decide, well, what would I want to do later on? I really wanted to start a business. And so I had to make a big change and get into business. And I went down that route in school, and more later on. I worked in construction, manufacturing. I was a ramp agent at some point in my younger 20s, did warehousing, did various roles to figure them out. Not that it wasn't stable, it was just me trying to figure out different things, and not everything in life is linear. So I'll come back to things in a bit, but people stick with me a lot because they see that I'm a very loyal person, and my closest family and friends would tell you that. I'm a Libra, if that says anything, so I'm very loyal, I'm well balanced, and I'm more of the analytical, intellectual type of person who reviews a lot of documents. I look at a lot of soft pulls. I go throughout the process, and I look at these tax returns, bank statements, depending on the type of service, so you won't be left alone and not knowing. So aside from a lot of that, I know how to pre-underwrite and underwrite files well and see it through the people's lens and the lenders and what they're looking for, the underwriters entirely what they're looking for, and much more. So back to this topic, the credit card stacking. What is that? How does it work? So credit card stacking is a way of saying we can add multiple business, even on the personal side, but business credit cards is what we want to focus on, and having multiple applications, getting multiple cards at once, and then doing this strategically to get up to $150,000, up to $250,000, and even more. And how can you do this to get up to $100,000 in less than 90 days? And the secrets that the banks may not be sharing with you, or some tips on what you need to know about to be better prepared before you walk into those banks, whether you have to do it in person or should you do it online, or a combination, perhaps a hybrid. But the ways you can do this to get 0% interest for 6 to 24 months, 6 to 18 plus months, just depends on the location where you go and what cards you can have access to. But a lot of people are doing this because it is so effective to start off with 0% interest, no docs as well, stated income, projected revenue, and understanding that you don't have to supply bank statements, tax returns, no financials, P&L, balance sheets, debt schedule, all these other things that I would ask of you and the lender would if we were to go through like an SBA loan, or if it were minimum documents like a revenue-based loan advance. I do plenty of those. And so I just wanted to bring that to your attention and know that the business credit card stacking isn't the end-all be-all. It can be the place that you begin with, or in the middle, or at the end of your road, whether you knew about it or not. but this should only be a starting point or maybe a middle or end point to then more as well on top of that end. And you say, I need to get more like of a term loan, whether it's an online bank term loan, a physical location bank term loan line of credit, or it's online line of credit. You have fintech companies, private lenders. So if the banks don't work for you entirely, whether they're the top tiers, they're the regional, community, or the lower tier banks, there are other opposing ways to get started. So I have a few notes that I have here on my laptop. It's right to my left hand side, and I'll go through it in a moment to discuss a few bullet points just so I make sure I don't miss any of this. I don't really need to go through it, but I want to make sure that I don't miss anything. So the credit card stacking is so valuable, having multiple business credit cards at once that you can use at your disposal, putting multiple applications. But the main thing to this is understanding where to go, because if you make a mistake and you say, hey, I need to make payroll. Hey, I have an inventory project need where I'm going to be generating an additional 300 to 400,000 once I get new things on my shelf, and I don't want to be have that not be there, or also if it is, have that sucking up my cash flow. Because what you don't realize a lot, especially with inventory, if you have plenty of it, it's even worse, but you can have a lot of your cash flow stuck in your inventory. And these topics are for another time. Like, how do you use the funds? You can use this though for real estate investing. You can use it for purchasing property, down payments, paying off other debt. You have rental properties, fix and flips, commercial property, whatever you're trying to invest in on the real estate side is a great addition, a great bonus. And you have to understand what banks will lend to real estate, and if you don't have the right NICS code, as in like the right name of the business, what that can do. And also on the other side of business, if you have growth and expansion, you want to put $10,000 into a marketing campaign or a couple of them, you see that you put $1 in, you get $2 out, you have some pattern recognition, and you really want to scale, you want to move up and grow from $1 in and $3 out. So I can get more out of that and get a higher return on investment. This should be used to fuel new opportunities, new investments, or current income revenue generating streams, and growing those even higher, and not just settling on hitting an equilibrium point and staying stagnant or going backwards. Sometimes you end up doing that to pay off other debts because you need to bounce back up, but how quickly can you get back into the green and have enough operating cash flow? Have enough into these derivative parts of your business that you're still trying to learn from and grow from. And if you don't have that recognition of what you can get if you input this in and you get that output, that can become problematic. So just understand that you do get that 0% interest period. So use this correctly. And if we needed to add more, we can look at revenue base, we can look at collateral, we can look at business trade credit, although business trade credit isn't necessarily like money given to you, like revolving credit and installment credit, or installment loans, excuse me. So you have to look at the other options, revenue base if you have already revenue in the business. If you don't, if you do have revenue in the business, but it's not like you're depositing frequently or it's very minimal, but you have better credit, then we can leverage credit card stacking. I help out a lot of people with this where, hey, somebody does $3,000 a month or $5,000, but they have 700 plus credit, 680 plus credit. And they have that more or less on all three consumer credit bureaus, and they have a better credit profile. It's clean enough. And then we can say, well, you already have these limits on your personal side. We can normally do 3 to 5 times the amount on the business credit side. In case you were wondering how much of an approval, we look at the personal credit card limit and limits on those and each one of those bureaus and see from where they've been pulled from and where you've been issued it from. And then also go to those other providers that if we needed to go to another banking relationship or a similar one, you already have something established with them, which is great, which a lot of you should have. Is I recommend, my primary bank is with Chase, and I have others too. And when I realized this whole method of separating your personal from your business, everything for me then skyrocketed with those. And that's why I've been called upon this mission as an introvert, as hard as it is for me to be on camera. I've learned, you could say, the skill set. I'm more of a blogger than anything, but the thing is, I've learned my mistakes. I've learned what it's like to go through a startup phase and not have enough money. And if I were to start it all over again, if I didn't purchase a business this time, if I went back here and I said, I'm going to start from scratch all over again and create a new LLC for that and get another card underneath that LLC and get multiple. If I'm starting off let's say if I didn't even have any business credit at all, and I only had about 40 to 50,000 in personal credit cards divided over 2 to 3, and that happened at a point, and then I could say, well, now I'm going to form the entity correctly, and I'll get into some of that here in a second. But credit card stacking is so effective. I'll get into some of the banks here. I have some notes, and then we'll close up shop. There's quite a few bits of information that I want to go through, so I don't miss first, and then I'll get into probably a scenario here on what it could look like if you were to get 4 to 5, 4 to 6, 4 to 7 cards. I normally like to target 4 to 5 cards. Exceeding 6, exceeding 7, then becomes an abundant situation where you have too much recent activity. And that could also mean that you've had denials elsewhere, or we're just trying to figure out a lower tier bank at that point that you have to get so high in that 6 to 7 amount range. But with the credit requirements, and keep in mind, you can use a credit partner for this. This is the most attractive solution that I recommend everybody get to if you're not at it now, but move forward with it. And this you can even use in combination with a HELOC. Home equity lines of credit, more than home equity loans, are becoming very popular, especially for those of you who are in real estate investing, who can use more, pay off other property, and use it as a lump sum or a revolving, in this case, for lines of credit. But using any kind of a line of credit, whether it's for real estate investing needs that you can withdraw from, whether you're doing a construction build and you need an additional there, or you are a business owner who's looking to apply this for variable uses, for inventory, for payroll, things that kind of just go up and down, even if it is a fixed amount. But variable uses for lines of credit are very great to use. I have them myself and they're exceptional. And there are ways that you can get multiple amounts. I'll get into that in a little bit. But the credit requirements for credit card stacking, and again, if you're just joining me here, we're streaming this one live, and this will be as a replay later on YouTube, so don't worry about it. And I'll go to the comments when I get a chance to. You are most welcome. Appreciate you. Thanks. And so with this understanding of credit card stacking, adding multiple business credit cards from different providers, different banks, regional, community, lower tier banks, we do it in a specific process to get you the most. And I'll get into some of what the examples could look like in a second. But the credit requirements to a lot of this is you're looking for a 700 plus credit profile on all 3 consumer credit bureaus. I was going to say credit files or credit profiles, but bureaus is the right word to use. And this is not a knockoff. This is not a catch. This is just saying, where are you now? Why are you there? It's what's most important is to look at is why you are where you are at. And it's not so much about the what, but the how you go about it and how you go through the process when you get to the business credit card stacking, even if it were the personal side at a point, but at 0%. But the business credit side is really the focus because you can separate your business from your personal. At the end of the day, you want to use your personal for more so of a quick, I don't want to be a liability issue, or I don't want to become somebody who has too many expenses. So I'm going to use a little bit of this for my personal life, or I'm going to use a little bit of this for the business just to pay down certain expenses and focus on the business credit cards to fuel your growth and expansion. Although you can use that for other needs as well, but it won't be reporting to your personal credit for the majority of it. It reports on your business credit, and that'll allow you in a way that it'll allow you to increase your business credit profile. I should say that because there are different ways of it reporting and for different credit bureaus and from different cards. So it reports there and you can increase different ways. And over time, as you start building your business credit and you have these timely reported payments that are showing, and you have your business credit reports where it also shows you what your DNB score is, what you have for your other bureaus, that'll allow you even better access to have those SBA loans, bank term loans, having a FICO SBSS business liquid credit score. This is stuff that I didn't even know about many years ago when I was going through the trenches like a lot of you are now or have already been through it. But 700 plus credit on all 3 consumer credit bureaus is what we're looking for. At a point, it was 680 plus. Now, if you don't have that, again, why, what, but more so, how do we get to it? So that's not for this topic today. I have created content on this. I'll try to link it to you down below, and I might go to it a little bit later on. But when we're there, we're there. Now we have to we can do this with a soft pull. I look at a lot of soft pull. And I look at a lot of bank statements, like I said. So not like I need to look at that for this because there's no income verification on that part, or it's just stated income. It's pretty much no docs. And so no bank statements, none of that. It's based off of projection. And certain issuers of credit cards will look at saying if you applied for a card and you put in the application over 30 or 35,000, a lot of the times like an Amex, they will ask for verification, and they'll ask for the tax return or tax returns and a few bits of documents. So sometimes you have to understand where to turn to, and that you're not pulling from the wrong credit bureau at the wrong time, because then that means you won't be able to leverage some of these higher tier providers that are best to go to, because they can give you the most amount. So 700 plus credit. If you don't have that, get a credit partner. Do you have somebody in your business that owns 10% of the business? Or can you put somebody into your operating agreement that allows them to have a percentage? At least 10% is what we're looking for. If not, give them more and give them more responsibility, unless you just want to put them on your operating agreement and just tell them they're doing the very minimal. They're just kind of like a partner just sitting there. They don't really have to do anything, just collect from us. We give them a percentage of it. And then later on, we might not want that, or we're going to make a transition. So it just depends on how you are set up and what you need to add, if anything. Now, that's the way to go about it if you don't have the credit, or you wait till your credit comes up. I'll get into some of the credit requirements also on what we're looking for more in terms of payments, and if you're missing payments and this and that. So stick with me on that. But you can also seek out another business owner, somebody else who runs their own business, a friend or a family member, anybody you know who you're willing to get in contact with, and they're willing to help you in return, to say, I'm willing to help out Janine, I'm willing to help out John get these 0% interest cards. So they're going to be liable and take on that. So they'll be able to apply underneath their credit to get issued that credit. And when you go through it on your own to get these business credit cards, do not have any authorized users. It has to be primary. So that's how we look at it. And you can use somebody else to leverage getting you that. Or if they don't have a business, then we could potentially just look at the personal side and fund based on like a personal term installment loan, potentially personal credit cards. If so, maybe not 0% or anything like that, or a few other things to look for. But now let me get into this side of the equation just to make sure I don't miss anything. Some key points here. Chase is the one that normally gives the most. You can get between 1 to 2 cards of 100,000. And it's a great place to begin with, and what I recommend for most of the people that I help with this. And again, you don't want to do this necessarily too much on your own. Now, if you understand it and you've navigated through it, it's a little bit different. But too many people go through this on their own and they make mistakes. They apply to the wrong card or cards all at once, thinking that they're doing it correctly because they learned something online and they thought they would go do it for themselves. Or they're applying for the wrong credit bureaus, and that can be pushed into the same package if you're applying for the wrong cards. And now you're pulling 3, 4, 5 times from the same credit bureau, like in Experian, where you shouldn't have gone over 3, at least the most 3 from each credit bureau. And at times it's better to mix up and normally do 1 from Experian, do 1 from TransUnion, and do 1 from Equifax in that order, or vice versa, however it needs to be. It is all dependent too on what you already have on your credit profile. So if you already have a Chase card, how long ago did you get that? Did you request for a limit increase? Or how recently new was there an account that was open, a revolving account? Okay, when I have that understanding and how much you've been using that credit, what you've been applying it to, and also because that matters for whatever industry also, I'll have a better idea of what could be the approvals from those cards if we can go get another one. Oh, you have an Amex. Oh, you have a Bank of America. Okay, now this is the way to approach it. We need to go to lower tier banks now. We need to go to more regional. We need to go more to community credit unions. And I'll get into some of those community credit unions in a second. But Chase is one of the best ones. I have them. I have Bank of America, US Bank, Key Bank. I have many others, community credit unions. I would always mix the word credit union or credit community union. For some reason, I would say that because credit is normally the first word that I would say for many times, but community credit union is a great addition, even if you're doing like a pledge loan or any other kind of like personal loan on the personal side. So like a pledge loan with like a Navy Federal, where it can keep your interest rates low enough and you put a deposit into a savings, and then you're able to withdraw from and use from. That's a great addition. And then if it's going to help you, whether you're in real estate or not, to then later get higher approval amounts, that's a great way to go. And then looking at these other locations, but you have to do it strategically. It's not to say you shouldn't go to a Navy Federal. And if you have a relationship with them, there you go. And you can begin there, and we can reverse engineer from your best banking relationship, or the one that's less sensitive to new accounts, new inquiries, or perhaps it was a late payment, and that may be more justified instead of going to one that you don't have a relationship with and they would decline you on the spot. But late payments are a big issue. For the most part, they decline people. But Chase is one of them. Elon Bank is a great one to go after as well. I'm not going to get too in depth on all of these ones that I'm going to list here. That can be for another time. And I want to move on to the next part of the material. Wells Fargo, for their business line of credit, normally what you see is hard pulls from Experian on them. But there's nothing wrong when you think about a hard pull, especially if they're not tied to any of these opened accounts and report primary trade lines on the personal side. And then you can remove them and repeat the process every 30, 60 plus 90 days. Or you can revisit a lot of getting new credit over 6 months, over 12 to 15 months. It just depends on the position you're in those cards that have been issued and what is possible there. Another one to look at is like a First Citizens Bank and a Citizens Bank for their different products that can be put together as one. And there's other banks out there like a Truist Bank that can be added as one inquiry for about 3 products that you can add on the personal, on the business side with the lines of credit. You also have business credit cards. Those are a great addition. So it's not just saying you should go to 4 or 5 different banks that can get you 4 or 5 different cards, but saying, how can I get as much underneath one bank? What can I do to leverage the relationship if I have one, or if I need to have one? Or like with some like KeyBank, you don't have to have a previous relationship with them and go in there and they have up to 50,000 and 0% interest. Business lines of, or excuse me, business credit cards, and up to 50,000 in their line of credit. And some of these institutions out there that if you ask for over 50,000, it's going to require some income verification. It's going to require some documents to look and see some revenue and things coming into the business. And banks have become more stricter, and they're lending a little bit less in terms of business lines of credit. And the top tier banks like a Chase, it's much harder to. They're looking for a lot more in their credit side. They're looking for 750, 751 plus credit levels, if more or less, when you're watching this as the economy shifts. And they're looking for higher revenue. They're not just looking like what these fintech lenders look for, which is at least 500 to 700,000 a year in annual gross revenue. They're looking for millions, 1.4, 1.6 plus, if not more or less. And having that established relationship is going to help you a lot. So anything that you have, like a personal credit card with like a Chase, I started with that, multiple, and I looked at then getting a business credit card over time. And since I already had used those cards and for whatever I needed to use them for, and I had at least over 10,000, that's what you want to do. Is if you can get anything at least a $10,000 to $15,000 range, and then do a 3 to 5 time multiplier on the business, it can fall up there 30 to 50,000 plus, or it could be somewhere between the equal point of 10, or if you had 15,000 to about 45 to about 50,000, or 10,000 to 30, or 10 to 50,000. And this just depends on a few critical points and how you've been borrowing and what you've been using and what you have not been using and how much overhead your business has. That's what they look for as well, is the overhead of your business to see how much you have. The lower overhead, the better. The more they're going to want to issue you credit. If it's a higher overhead business like a construction business and a few of these others, and they endure a lot of expenses, because I see the businesses, I see the P&L balance sheets, I look at all that stuff, and you couldn't imagine how much their overhead is, as well as how much they have to take on. And then they take on new contracts, they have to hire new people, they have new things that they need to pay for. And the payroll and all this other stuff, that it just over exceeds sometimes the revenue. And even if it doesn't, the revenue doesn't amount to too much. And if it did, the expenses just happen to rise as much as that does. So having enough cash flow, having enough profits is very important to have at the end of the day, aside from a lot of this. So those are for a couple. I named Truist here. 1 pull, 2 cards at 0%, and then it could potentially here be that way. And then normally what they look at in terms of the credit bureau is an Equifax, as the Citizens Bank and First Citizens Bank there. NIHFCU is one that I listed here with things as a soft pull and how much up to. I've seen 20K up to a lot of the times with those. DCU, you have Navy Federal, as I mentioned. Normally on the credit side, they would pull from TransUnion. For pledge loans a lot, and like I told somebody the other day, trying to do a pledge loan with Navy Federal because of their situation and a late payment, and that still may be hard to go for, but it's something on the personal side, and it's usually after a year's worth, and it's secured, so that makes things a little bit different when it is pledged, but still it can make it hard. But normally they'll see from Experian and or Equifax. At times you'll see that too through TransUnion. And a quick pro tip here is if you're already over leveraged and these credit bureaus or these banks and locations tend to pull from different places, it's going to be geographical and location targeted, as well as if it even weren't that, they're going to look to see if you're over leveraged and if they can pull from another credit bureau. And if you had that relationship with them and you've had that usage, you drop your utilization on your personal side enough and you've had it low enough for some time, I would say even less than 15%, that'll also be able to very, very much help you in the approval process. So also don't miss the fact that they're going to look at your personal credit. Personally guaranteeing it is pretty normal. This happens. It's happened to me plenty of times. And it's just to say that if you were to default, it falls back onto the person, not the business itself, but the person. There needs to be an entity behind this. And why wouldn't they do that? Because they need to make sure that the person is responsible and accountable for that debt, not entirely the whole business. And so when you talk about Chapter 13s and Chapter 7s, making sure that you understand the differences, but when you get yourself into a personal bankruptcy, whether it's through a credit card, whether it's through a personal loan installment or revolving or anything else, you have to understand that we need discharges, not dismissals. Discharges are the ones that we're looking for. And that tells us that this has been completely paid off and it's been completely removed. There's people out there who have settlements they need to go through for equipment and things that I need to collect. And so there's a lot of stuff that happens in the background. But with a lot of this, normally with the credit card side, is all we need is the articles of incorporation, articles of organization, you can say, listed within the Secretary of State for proof. And then we'll need an EIN letter showing the validity of your business and making sure things are in good standing, you have a good operational business, things are there, a copy of your driver's license. A lot of the times, that's what you'll see. If anything more, there's that, but it's very limited in what would be required to prove this and then be able to help you get the cards that you need. Another one here you see from PNC Bank. This is one that I've used, many people have used, and it's one part of the sequence that I like to put together if it's your first time. Or even if it isn't, but you've leveraged some of those other banks already enough of, and we only have a limited amount, or certain regional banks, but we have some few slots that are open. And if we needed to go to a community credit union and do third-party underwriting underneath that, that's another perspective to take. But PNC Bank is a great one, just like Truist. A lot of things can happen there and what they offer. And just keep in mind that some of these locations, it could be location dependent, one, but then two, they come and they go. So especially with the lines of credit, some of the cards, you might see only promotional deals at times. Other times they're opened up for a while. So it's best to get in as soon as you can, because I know things change with like a Key Bank or a few other ones where they're just having it for a limited time or they have to pull away from it because of the economy. There's so much of a disruption and it's pretty bad. As a broker, pre-underwriter / underwriter, I see a lot of this and it's hectic. Like there's a lot of different ways to get funding, but without the credit profile for at least this, do you have bad credit but the revenue? Do you have liquidity in this, cash on hand, enough of this, equity in this? Can we withdraw from that? Can you use a credit partner who has property, commercial real estate, or investment real estate that they own, property that they own outright to pull and withdraw equity from? You don't want to start immediately from your home. If you had investment real estate to look at, things underneath your business, if you own the property, if you didn't, what would be the case? And that's a topic for another time. And I've done plenty of that stuff. I'm not here, guys, just saying it. I've done this stuff. And whether it's for myself or for multiple business owners, I understand the situations for the majority of businesses out there in different industries. And I know how to ask the right questions. I speak less. I listen more. As you're seeing this here, it's the material. When I'm not here, like earlier, I was looking at bank statements and I'm going to be going back to a little bit for at least an hour more and I'll be done as I'm kind of getting tired of here. See, I exhaust my brain when I work with bank statements, and that's what I love, the fulfillment in that, helping people and my why to that, and seeing that a lot of people are having problems. And if I can share with them my stories and what I went through, and at a point where I was in a financial logistics role and the company went down under and I had to go back on unemployment benefits and food stamp cards, that was not a good feeling at all. And me being the introvert that I am, I have a younger brother too, it was just demoralizing, even just going to the register, not making eye contact and just saying thank you and being appreciative, yes, but and grateful, but it just didn't feel right. And just going out for a meal and not even being able to split it 50-50. I knew I could, but I just wouldn't do it or I wouldn't say anything. And I felt so guilty. And times when I would, I was like, I can, or I can, but then I'm not going to have enough for this. And so it was like a big gasp for air that I didn't have. And everything happens for a reason. Although I went to school academically, not everything is linear in life, and you have to understand that. And a lot of that set me up for who I am today, and going through a lot of hard times and being in a hard area out in California at a point that I had to live in an apartment complex that wasn't suitable in a bad area for a temporary time. That's because I had to make a transition from a different work, and then I was going to come back to Washington. So it was just a little bit of time, but not having a bed or a mattress to sleep on in this apartment where it was just not good. I wouldn't say it wasn't safe, but it just wasn't that good. And so I was just so appreciative and grateful of that time, and having to be resourceful even more than that, and having to really think about my decisions and be more critical and be more calculated. And that's where I learned more of that and how it is like to be on your own. And although I already had that, but even more like what you can and can't rely on, and how that makes you even tougher. So things happen for a reason, and I'm very grateful of that. So we listed some of these, excuse me. There's Bank United, Ameris. You have a few of them, like Penn Federal Credit Union is another one if you're trying to go for a personal loan as an alternative to Navy Federal. We spoke about Elon Financial, but that's another one to look at. So a few ones that I already mentioned, KeyBank, Amex. I'm not going to go through the data, like as in what they're looking for right now. I've made content on this in the past. I will try to link it for you down below in the description for more resources. And if you'd like to get started, I'll leave a questionnaire form for you down below, as well as a landing page that you can click on. And there will be a video likely where you can learn more about the credit card stacking side to this and learn more about what the actual requirements in total will be. So I'll have that for you. But the questionnaire, if you want to get a very highly personalized, customized, and in an email response, even normally showing you with the PDF is normally what I give people, detailing per detail what the qualifications are, the details for each one of these products in terms of revenue back, collateral back, credit back, and what we're looking for, extra material, and showing you information that is not even publicly released and from an expert that can pre-underwrite/underwrite files and very much so help you. That would be the best direction, and many people fill that form out. So we spoke about Truist, and their business lines of credit. I didn't get too much into that, but up to 100K or so, how you could apply online for a business line of credit and some of the other products, and what they would pull from. We already spoke from that, and there's a little bit more of that. The different application parts of the process, I won't go too much into that. I went into it a little bit earlier. Anything over 50K, what would be normally asked for, documents. And then we can get into a little bit of this, like what would it be based on if they were asking for documents, how much can they lend you, 10 to 20% on the business line of credit side of your top line revenue. And if they needed to verify a tax return, they're looking at the previous year, and just a little bit more, and how they're dividing that by a number of 12 and a multiplier of what number that they need to look for in terms of how much they can lend you. So there's a little bit different things that different banks look for and how they calculate. And I have that internal stuff and the understanding of it. So that's that part. This part I just have here, primary trade lines, and adding them if you need to bolster up your credit profile. And I have a few recommendations on organically adding them, looking and starting off with your oldest aged account and oldest age limits, and seeing how much you can get in approval if you had to get an increase, and begin with that. So I have a little bit of details there, purchasing trade lines, when it is the right time and if you should purchase one. Credit card notes, if you're doing anything from secured cards that turn unsecured to then getting a couple of them with like a Discover, or there's another one out there, or we do that with the Navy Federal, and we turn things unsecured and then have that rebuild your credit, establish enough credit, and then ask for a credit limit increase over time. Then you get a pledge loan if you didn't already, and then that's how you continuously build and get access to more funds. But a lot of this, you do want to combine it with multiple products. That is the best way to go. So that pretty much covers everything. Let me make sure I didn't miss anything here. I spoke about quite a few banks to look for, some of the criteria. I'll cover a little bit actually of that in a second. But there are different banks that we can look at different regional, different community, and lower tier banks. But there's a process with, like, let's say Chase, Bank of America, and then it's PNC Bank, and then it's Truist, do four, or we do a couple of rounds of Experian, or it's one Experian, and then it's one through TransUnion, one through Equifax, or two from Equifax, and then from one banking location, or a couple. So it's just to understand that and not making those mistakes. Because there are many more banks that I haven't listed, many more regional things that are more specifically in community based upon your state. If you want to get from other locations, it's best to have a foreign entity filed. Underneath an LLC would be best with a lot of this. If you're a sole proprietor, yes, it's not to say you couldn't get cards, but the approvals, I don't see them being as high. They can be 1 to 5,000 more or less. Not as high as you would get on the business side. So if you have your structure correctly, like your business phone number, the business address, and an actual business address, not a home address you use for business. So getting like a virtual office and a physical location listed, that is very helpful. And then doing it for a few things like being listed in the directories, your 411, having your DNB is helpful. It's not always like it is a necessity, but that's what I would recommend having all of that already put together. That can help you build your business credit. It's also as important with trade credit, with like suppliers, you have vendors, you have an Amazon account, and you're getting these lines of credit or these cards issued or this credit through them, and you're getting net 30s, net 45s, net 60s, net 90s, net 15s, net 25s, etc., net 20s. You can go on and on about a lot of that. So that's just some of the criteria. We named some of these banks that I have listed on here, so we don't need to go through that one again. I gave you a little bit of a scenario on the type of stacking that could work. Just depends on your credit profile. So the Bank of America, I'd start with Chase though first. If you already have things from Chase and it would limit us not getting as much on another card, or if it's not even worth to go for it and just increase the one you have or keep working with the one you have, but we can get you more from another one based on the credit you have over here, then we can work on that. If you have a Bank of America relationship or not, did you just open up an account with them? So it's just understanding the whole scenario and then seeing what we can do from there. And I already said this, since your credit will be pulled and there will be hard inquiries, just know that, but they are not attached to any open accounts. As I mentioned earlier, we can then remove the inquiries and repeat the process. And if you're asking for ways of why is it so effective to do a lot of this, is because liquidating the cash out. Liquidating the cash out with a merchant processor or a different liquidation with a small fee to it, a very low cost fee to it, nothing a lot of, and doing it a different way where you have to owe somebody and you're doing an ACH deposit, turning credit into cash, or you have suppliers, vendors, or you have these creditors, debitors. You're talking about different scenarios on who you owe money to, who owes you money, and how you can collect that. There are different ways than just using a cash advance fee where you have a huge amount, high percentage that you have to use just to swipe that through an ATM or a few different ways. There's balance transfer checks. There's a few different situations that I haven't mentioned all entirely, but that can be discussed in time as well. But here, I pretty much cover that. I want to make sure I don't miss anything here. And then I have one last document to look at just to make sure. So I guess I can go through some of these. I didn't want to go through all the requirements, but normally every banking relationship is different. Some of them it's better to go in the branch. Other times it's best to do it online, or you could just do it online, or we have that banking relationship as well that you can leverage. But when you have that relationship manager and they know you, that makes a big difference in the approval amounts. And that is very helpful to have because of different products and having that score with them and having that overall relationship. It's the most important factor. In certain other banks, you don't have to have that with, and other institutions. But again, I said the personal credit score on all three bureaus at 700 plus. Have no more than 4 bank inquiries per bureau in the last 12 months. That's pretty standard. Other times, especially if you're building your personal credit, or even if it's on the business credit side, so excuse me, somewhere between 50K to 250 or 50 to 150K approvals, I like to tend to see no more than 2 or 3 inquiries, no more than 2 to 3 inquiries per bureau. That's a lot of the times what I like to see. Even on the personal credit side, if you're trying to get personal credit cards and things like that, they normally want to see a lot less. When it comes to like personal loans and things like that, you don't want to have any more than 6 inquiries in the last 3 months, more or less. It just depends on the provider. Other institutions like a key bank, no more than 3 hard pulls in the last 6 or so months. So it just depends on where you're going. So be cautious of where you're going to go get new credit and having to apply for home loans and all this other stuff. And you're racking up too many inquiries and you're getting through all of these problems, already applying for other credit that you shouldn't have applied to. So that in the last 12 months, no more than 4 bank inquiries. And here though, this is the part of it that we can have the exception here. It does not include secured inquiries. Secured inquiries like auto loans and mortgages have no more than 3 unsecured accounts open in the past 12 months. It does not include secured inquiries like auto loans and mortgages. So having too many open accounts, 3 is very standard, and we give you 12 months in that, which can be less helpful because you'd like it to be less, so it's already gone. But having too many open accounts, having new accounts does more harm than any good, because that factors in. That's probably the acidity from the ketchup. I had an egg earlier, but that's what factors overall into your total credit. So into your total aged accounts there. So if it is not an average of a high amount, or if you don't have a couple that are high enough to over exceed that, and too many new accounts, too much new activity, it doesn't do you any good. Too much things that you've been applying to try to get new trade lines, or to try to do a lot of this to then add more revolving accounts. And it makes it hard, and it can lower the amount, if not completely wipe off everything that you can get. Have under 40% utilization on each of the revolving accounts. This is not just an average, but 40% utilization on each of your revolving accounts. So don't look at the average and determine that that's underneath 40%. It's the actual combination of having all of them looked at individually and saying that you have under 40% on each of your revolving accounts. That's what's most important to this. And there are others out there, especially on the personal credit side and getting issued new credit and things like that, where they'd like to see typically underneath 30%, under 35%, and then having comparable credit that they can look at previously, and then comparable credit, having personal credit cards to then getting business credit cards. That's what's looked at, and getting those high enough of limits. No bankruptcies that are at all showing on your credit file. Pretty standard. I spoke about bankruptcies earlier a little bit. Didn't speak too much in terms of when they get wiped out and this and that. It's no need to go into all of that right now, but at all showing on your credit profile, that doesn't need to be displayed. So don't have that on there. Get them removed completely. We don't want to see them. And typically anything just over 3-5 years, maybe we can look at, but it just wouldn't work if it's on your credit profile entirely. That's what we want removed. No open, parentheses I put here, unpaid collections or judgments. Be careful with derogatory marks, anything like that will get you. Don't get yourself involved with that. Clear things off. Don't owe anybody else money. Don't fall into a court order trap. And now you have a court order piece of paperwork that you can prove you went through all of this. And it just becomes a big liability and an issue to get you credit. And if you can't show us that you can even handle, like you're asking for 40 to 100,000, let's say, but you can't even handle 5,000. Like you don't have enough of a limit or in total of a combination. Like it just shows us that you cannot handle, like what makes us think that if you're only getting issued 5,000 and barely using that, or if you are using it, what has it been used for? It really hasn't been used for things that are generating you even more revenue for us to then justify giving you even higher amounts on the business side. So it's better in some cases to pull your personal credit up and then later on ask for those limit increases, or ask for more business credit, or if you didn't have that, ask for business credit cards. Have no late payments in 2 years, no charged off accounts. So to get any kind of business credit cards, even on the personal side, you don't want to have any late payments in the past 2 years. That's what gets a lot of people. No if and or but. Late payments, whether they're there or not, whether they were there 6 months ago, but you had it removed, you went through credit repair, it was justified that it was taken off, and then you come back and then you try to approve and it wasn't disclosed by yourself. And if you went to the wrong provider and they didn't share that with you and they didn't ethically do it right, but that'll then show up later as a hard pull and they did do it right, like that's where you get yourself into a lot of issues, applying to the wrong places at the wrong time and getting issued wrong credit if you did get it, where you could have probably got multiple products. You should have gone to a community credit union, or that should have been last. You could have been approved for these ones, and there's a little bit more. So no charged off accounts, no late payments in the past 2 years, seasoned major bank card trade lines of a 5,000 plus limit. That's what we're looking for. And normally we want 2 cards with at least a 5,000 plus limit on them, a primary card. That's why authorized user cards and that won't work in this scenario. But having at least 2 is helpful. But another way for me to say this is well, let's just say this part again, having a seasoned major bank card trade lines of a 5,000 plus limit. But here's the other way, must have a minimum of 2 open revolving accounts with at least 2 years of history or more. So there's that part. And then you can have 1 open revolving account if you have an aged mortgage with at least 2 years of history or more. So instead of having 2 open revolving accounts and having those limits, you want to have at least one of a revolving account that we're being lenient on, but you have at least 2 years of an aged mortgage of history or more. That's a big part of this. Or the same thing, a 1 open revolving account, and you have an aged entity over 2 years. Your aged entity, having an aged LLC rather, is what's going to help you get higher approvals. So anything 2 years and over is going to be a significant difference. It can be between $50,000 to $100,000 difference. I've seen it many times, and I do a lot of these soft pulls myself and or with my team. And we look at these things and go, if they would have only had 2 years already, and they already had exceptional credit or good enough credit, they would have been issued an extra $50,000. And with between these 2 cards, but because they don't, they're limited to at least 25, at least 10,000, 10 to 25K range between 1 to 2 cards. And that'll be at that point, will it be enough for them? And then they got to increase their credit over time and then get more if they could. If they're overextended and over leveraged on credit, it makes it harder to get. So that's what I wanted to mention in that part. Let me make sure I didn't miss anything from this. Let me look through this other document. I think I had another one here to make sure. So yes, I mentioned all of this, especially with the 2 open credit cards with at least 2+ years of history or more, or the 2 revolving accounts on that end, as you see, or if you've heard that just recently, that's what we're looking for. And then on the personal side, normally it's just a 3,000 plus limit, and I won't go into the whole personal credit side of this equation. That's a different part of this. But I spoke about these subjects. I shared a little bit of light with you and what we're looking for. Certain banks will look at things differently and to issue you new credit and having a certain specific credit score. So the 700 plus is a given on these. Have at least 2 open credit cards. You can say not closed, but 2 open credit cards that have been open for 1 year at least. What a lot of these bigger tier banks or 50K to 250K are going to be issuing you. Have no collections, as I mentioned earlier, no charge-offs, as I said, no late payments on that, and within the time that I gave you, no bankruptcies at all. Utilization on some of the major ones, and if you're looking for a higher amount, they're going to want at least 15% and under in utilization. It depends on what credit bureaus they're pulling from as well for what cards. Have at least 2 to 3 inquiries per or less in each bureau, and then at least 4 years of aged history. So if you have more than 2 years of anything, and if it's high above 4, that's really going to help you get the higher approvals. So that'll cover everything from what I wanted to get into this video. We went into utilization a bit. I have that covered here. Bankruptcies, no derogatory marks. What a lot of these credit bureaus or the bigger banks are looking for too is, like I said earlier, less than 3 hard inquiries on each individual bureau in the last 6 months, or at most not exceeding 3 in the last 6 months, like key banks in those. And a lot of them are looking for at least 720, if not 725 credit. Other ones can go underneath the 700 credit range, but it makes it harder with less optimized credit. So keep that in the back of your mind. With less than optimized credit, it makes it harder to get as much as you need to. And I don't think it's necessarily worth it to do. Unless you had bad credit and you're looking for a bad credit business credit card, you're still over leveraged. It's better to do a secured deposit and that you can withdraw from and use that, and to rebuild your business credit or your credit in general on the personal side. And that'll be most effective. So that is everything in this video. Just to quickly recap, we went over the credit card stacking, what it is, having multiple credit cards that are issued, multiple credit applications all at once, for the most part, you see that, and issuing you that new credit or working off of what you existingly have, but it's normally new cards that are given to you, and doing it strategically where they're pulling from the right credit bureaus at the right amounts, like doing a Chase and an Amex, doing one with Amex where you do have multiple products with them. As a startup or as a non-startup, you look at this and go, do I have a previous relationship with them on the personal side or not? It's better to have that in the door with them. That's what I would recommend before going to business credit cards. But There are ways of other ways. And I see normally 3 to 5K range in amounts of approvals if you don't have a previous relationship with Amex. And people always question that, like, why couldn't I get 30,000 when somebody else did? Well, they had a previous card with around 10,000 to 15,000 plus, and they had actually a multiple amount of them. And so they were able to get more on the business credit side because of that. And they were able to leverage their rules, their 1 in 5 rule, and applying for another card after every 5 days or so and doing it correctly, where the first time we can add a charge card on top of a credit card and then try to rinse and repeat the process over time if available to do. And that's a great starting point. So Chase and American Express are great places to go into. And I cover it a little bit more in here and what they're able to do and how all that works. So I might give you a few extra pointers on this that I haven't already mentioned. But let me see here. I covered this there. Yeah, covered that. There's a little bit more to Amex, but we're limited on time here. I can share more with you on that side and see what is possible. But that's the roundup of this. It's about how you go about it more than anything, and not making those mistakes, going through the wrong credit bureaus, going through the wrong courses, even that, and maybe even getting a charge in the upfront and not having to go through all of that. And then there's more on the back end that they probably didn't share with you, or that they did, but you don't want to have those additions on the back end. Now they're going to issue you more credit, or they're going to issue you credit now, and it's going to be a success fee of this amount. And so you have to understand what you're paying for up front. Be careful in that. And what also is on the back end. If there's a combination of different things, is it justified to do that? Another thing too is if you didn't want to do it yourself, there is normally a success fee to this though. And it's very justified. So if you're questioning what it costs, just know that it is normally about 9.9%. That can be dropped down to about 7.9% if you have a very clean credit profile. If you don't have a lot of recent activity, if you haven't been taking credit cards recently, or you don't have a lot of these cards already that will, when I try to help you with them, it would be like, we already have Chase, Amex, you have this, and maybe it isn't a lot, and that's as helpful, so we can try to lower it, and it depends on the client, but normally you see about 9 or 9.9% of those as a success fee, and that's normally off the total credit lines that are there. That's what you'll get. So you can do a percentage of 9.9% off of 200,000, off of 100,000, off of 50,000, and that's how much it would be, and that's how much the cost would be. But it's not a bad thing when you think about max credit and the experts doing this for you and the convenience. You don't want to mess it up. The people that I've spoken to that are also introverts like me, they go, I have some experience with this, Michael, but I don't want to mess it up, and I need to get this thing done here soon. So if I go through it and I don't get the funds that I need, I'm going to be making mistakes. Or if I don't get enough of what I need to at least cover over 50% of this, then I'm going to lose out on these contracts, or I'm going to lose out on this build. So I need to get this done. And can you help me? And even people who don't have that perspective, it's still justified because your experts are helping you, myself and my team. So that's what is best for a lot of these cases to do. Yes, you could always do it on your own and derive from that success fee part, but it's justified at the end of the day when you're going to use this money that you can even use to conveniently pay that other part down that we put a success fee on to pay that down, and then also use the new credit that you have issued to make enough of an ROI. It's all about where you make this investment into and what you liquidate cash out of if you're doing that. So it's about what you're making from it. What are your current margins? What would your margins then look like? What free cash flow, operating cash flow, and all of this stuff will you have at the end of the day? And understanding the differences between month over month and what you'll need to scrap for, what you don't need to scrap for, and if it's stable enough. So if you put the money into the right uses, you can double, triple, quadruple your money, your revenue, increase your profitability from like 10 to 20%. I've seen a lot of businesses increasing their margins, their gross profit margins, net operational income, and more. And so just keep that in the back of your mind, and that's how it works. And it is a great addition for many people to use, and it's not bad at all. And it depends on the file. And if you have a strong review done and without many credit cards, perhaps we dropped it down to 7.9%, more or less, but it's not given for everybody. And so you just have to allow that and understand that if you already have major bank cards and you already had issued a lot of credit, like why would it make it worth our energy and time to facilitate a lot of that? And so, yeah, at times it could be best to do it on your own, but other times if you don't know what you're doing, or other times if it's another way, it's probably a lot less, but it's not normally what you see in the industry unless you want to do it on your own and you save that. But the savings, as opposed to you getting this issued and you getting maximum funding, it completely wipes out everything else and every other notion. It's like a personal loan that goes 10 to 15% in interest normally is what you see. But like I've helped out many people get, and you're getting max funding. So you can go to a bank, try to do it on your own, whether you had a relationship or not, but you approached it wrong. You put something on the application that wasn't correctly done, or something else with your past history, and you just racked up an inquiry you shouldn't have racked up, or you just didn't see this. You got to pay this down first. Pay this down. Your DTI is too high. Or you got two things you need to pay off first before you go into that. Don't just pay it down to 50%. You got to pay it down completely if you want this. Is it realistic to do it in that time frame? And there's many more things, trials and tribulations that people go to. Over there, they get you 10,000. Over here, you were to go to and get 50 to 100,000 plus. I've seen that night and day from people going from at least getting 10 to 20,000 to getting about 40 to 60,000, 40 to 75K. Because what they don't know is actually what hurts them. And just trying to say, hey, I'm going to go to one bank. Well, no, that's fine. But now we're going to have to wait for something else to age. And now you won't be able to get access to this other card because you racked up all your inquiries on Experian. We could have gone to an Amex after that. We could have done one with another one that pulls from Experian, or we could have done this more strategically and done this one now with TransUnion instead of that one. So you got to think about what your opportunity cost is and your cost trade-off. And that's just me being very honest. So I'll go to the comments really quickly and end this. Appreciate you. Thank you for the follow, the likes. I don't always ask to share the room. That's just my introverted behavior, I guess. Doesn't, not like I don't always forget it. It's just not something I bring up. I don't want to be that person going, hey, follow us or share the room. That's not me. Got it. You need help closing a commercial real estate deal plus buying the business. When does that need to close? I'm not sure if you're still in here, Gabe. I know I went on for a little bit. I don't think so anymore. But for anybody doing anything that they need to close in a specific time frame, it's very crucial that you work on it as fast as you can and have the specific documents, whether it's a no-doc program that you're going through or it is one with documents, that they do get sent back, because I analyze all that stuff and I send it over to my lender. My lender and I go over it with the underwriter, and a lot of this stuff that we go back and forth on that you guys don't see on the back end, but you'll get that communication from what I'm seeing and we're all seeing, but you're kept up to speed. Plus buying that business, okay. So it's housed underneath that commercial real estate. I would ask you what type of business this is for. I don't think you're in here for this, but I would normally ask follow-up questions, and because of time too, that's something that can be discussed in time. And the questionnaire form will be in the bio. I'll leave this open for 30 more seconds. Does anybody have anything? And there are a few points of the process that I didn't mention, of course. We wanted to focus on the credit card stacking. There are more parts to it. There's also the business formation of it, being a startup and a non-startup, the uses of funds, variable and fixed uses and reasons, and where you're at right now, what your major problem or problems are. There's quite a bit more, but I wanted to give you guys a good view of what this could look like. And every client and every person is different and has different needs. Here on my screen, I have open bank statements from clients in the morning, and one that I will be doing in a little bit. I analyze them very well. I do my own calculations, and it is very helpful for myself and my team, as well as for yourself, because you'll have an understanding of what is possible and what isn't to do. And I'll share a lot with you more of our analyzation. I'll share with you more also on what is possible, what isn't, what it is I'm looking for. I'm always in my head, so it's like breaking down a lot of things. It would take a lot of energy and time too. So I've been doing this repetitiously for a while, and with my background and things I've gone through. So that's where I want to leave it. If you want to work with somebody who's very reputable, loyal, trustworthy, experienced, versatile, reliable, humble, honest, and I could say more, I guess, but if you also want to work with an entity in Viral Funding Solutions that is also going to be there, and they exist, as in I exist and we exist, the business, is because I was tired of seeing all these other people trying to figure it out and going through these online marketplaces, having a rough time, and it wasn't good. People getting scammed and people going through the wrong sources, not getting max funding, getting too much activity underneath their accounts. And some others would act on saying that they're a part of an entity when they weren't a part of them, and saying that they're a part of my team or I'm not associated with them. And there's people out there that buy information from the credit bureaus and contact you and try to act as somebody else. And there's companies out there that would even do a hard pull when there's a soft pull, and it only needs to be a soft pull with other types of services, with of course credit stuff. Normally see hard pulls at that point. But with other stuff like advances, a lot of these companies would tell you, hey, yeah, it's a soft pull, or they wouldn't tell you at all, and you'd think it's a soft pull from experience or not. And there's a hard pull. And even worse, they put you on what's called a data merge, and you're put on in a list where you're only tied to them. And if you don't owe them, or if you don't do this with them, they won't release you off that. It's so much trouble, and you have to be cautious. There are a lot of bad people that are in this space. But I'm not one of them. Again, I won't be here to pressure or push you on anything. And I only earn when you're able to get your funding. I only earn the percentage of that. So I don't get to put food on my table unless you are able to make something. And I'm very transparent. I could create all these other things that I already have put together, where I could charge you on this course. I can charge you on this entrance point. I can charge you here on the back end, but I haven't done that. And so I want to give you guys the best way of doing this as well, and understanding that I have a lot of things too, and that I want to give back to, and I give back to the community and do things like that, and also put a lot back into the business to help out other people. And I'm not a materialistic person. I don't need fancy things and all this other stuff, and kind of like an old person at soul. I'm in my soul, really, that at my age. And so, yeah, heart, you could say. But yeah, that's really what my outlook is, and I have that perception, and I've worked on myself in personal development. So character matters a lot. Character is the fundamental everything to the fundamental piece to everything. There's reputation, but then there's the character, and the character of the person matters immensely. Somebody of great attitudes, efforts, or just good, and they're there, morals, values, beliefs, the way that they act, the way that they think about things, their beliefs, all this other stuff. And if you're arrogant, cocky, ignorant, stubborn, hard-headed in this, it's not to say that I wouldn't work with someone like that. It's just, let's leave that out the door, but let's not cause friction and resistance and a lot of this. That it's actually causing me very much energy and time inefficiency, and my team, if so, at that point. And I don't want to have to go through those things. And very politely, I'm not that guy who wants to tell you these things. I just, from time to time, will, because people don't understand, and they just take advantage of others and expect something, and it's always about them, and it's when it's convenient to them, and they don't put themselves in the other person's shoes. I put myself in your guys' every single day. Hopefully it can be reciprocated. I greatly appreciate you. Thank you for your energy and time. All information will be in the bio and in the description. Look out for that questionnaire and more on the creative credit based side, as well as the 0% interest credit card stacking. Hopefully that was helpful for you. And again, all material will be down below. Talk soon. Bye.